Welcome back. The pre-open rates have settled, and as is the custom on Diwali day, the rates have settled higher, and that's where you should expect the actual opening as well. 86.72 is what we have. Stocks of the last year are actually doing well. So Eicher Motors, Asian Paints, Bajaj Autos, these are stocks which are actually closer to their 52-week highs than 52-week lows, and they have done well as far as pre-open is concerned. Atul, our viewers would want to know some stocks that you would want to bet on. We discussed the broader sector, broader themes, but blue chips, mid caps, any stocks that you would want to bet on now?
First and foremost, disclaimer that I or Rare Enterprises would definitely have an interest in the stocks we're speaking about. So please do your own research. I would have exited the stock based on stop losses, and people think it's a lifetime thing. So I really think that going ahead, the year ahead is going to be very stock specific. And I would really bet on some stocks that have been on a very good consolidative phase for the last year or so, and which are breaking out. So, kind of a great rally that's paused sideways for a year and a half, and then breaking out into new highs. So I think one stock that stands out to me, and which I've seen in the charts lately, is Arvind. I think Arvind has, disappointed a lot of people. There was a lot of talk about it, but for 1 year or so, it's been very volatile. And it's broken out of the range with volumes. I feel that Arvind could be an interesting pick. Another stock which I think, again, had a very big range. Again, disappointing relative underperformance to its peers has been Exide. I think Exide also is on the point of breakout, and I think that once this breaks out after such a big sideways, it's like you wind a toy for very long. When you wind a toy, and then when that toy releases, the energy or the force that comes through is very sharp. So I think I like Exide for that. It's been an underperformer and a consolidator for very long. And the third stock I like again is something which which has been trending. But in the specialty chemical space is PI Industries. That's another stock that's been trending very well, and I feel that it's going to buck the whole sector. And as a sector, it's in a great sector, but even in the sector, I think it's going to be an outperformer. So I kind of would pick these stocks. As I said, it's not about picking something very cute, a penny stock, or something that's unknown. But I really would prefer to go with something which I feel is breaking out and would sort of trend up higher. The consistency again is the key.
Okay, I must say it's a good mix of technicals and fundamentals, because all these three companies have something good going for themselves, whether it's a stake sale, whether it's good numbers.
I don't know about that.
That's not bad. That's not bad.
I don't know about that. I just look at prices and charts.
Also, it's in the space which actually has made a lot of money, which is a non-index large caps. You have the quality of a large cap stock, you have management pedigree of the highest standard in all these three companies, and at the same time, they are not really the big large cap stocks, so there's space to make money.
Oh yes, definitely. Okay, I'm going to come back to you for one more question on the overall markets to do with emerging market, etc. But before that, Udayan, you raised a very valid point that despite the market being up about 10% and a lot of stocks doing well, there are many investors that are still feeling very disgruntled and have not made a lot of money in the year gone by. What would the advice be to retail investors from this Samvat to next?
Well, I think the last couple of years, Sonia, have been a little disappointing, because the year which preceded it was actually a rocket of a year. The 2013-14 pre-election period, the market did so well, and after that for 2 years, the returns have been quite average. But if you look at the amount of money which has come in from the domestic fraternity, if you take it from the Diwali of 2014 to Diwali of 2016, if I'm not mistaken, I think domestic investors through mutual funds have put in about 72,000 crores into the market. I mean, that's $10 billion plus. So I think there's a serious amount of commitment which has happened from the local fraternity into the equity market, more in the year gone by than in the current year that we are discussing. I would suggest that having put in this money and having not probably got the kind of returns that people were expecting, particularly after the election result, which preceded the kind of rally that we are talking about, I think it's time to probably stay the course, because at this point, having been so patient and having gone average lackluster returns from equity, at least from the index or from many mutual funds, you just don't want to walk away probably before the tide is turning in terms of earnings. So I don't know what's going to happen in the next 3 months. Maybe there is a global accident, maybe we have a correction, and I would suggest that that could be a buying opportunity. And then 2017 and 2018, hopefully you hunker down and you cash in on the patience that you've shown in 2015 and 16. That would be my submission, that this is not the time to get out, and if you do get a meaningful correction in the last quarter of this year, you probably add to positions and then you reap the rewards in 2017 and 2018. So I think one should probably approach the market with a sense of opportunity or capitalizing on opportunity over the next 3 months rather than despairing and probably trying to cut positions in case there is a deeper correction in the market which cannot be ruled out for any global reason.
So is that the view you got from some of the market veterans you spoke to recently, like Rakesh Jhunjhunwala as well?
Rakesh is a perpetual bull, and I would be too if I had 10,000 crores running in my portfolio, right? He has to be optimistic given the kind of commitment that he has to the market. So, you cannot have that big an exposure and say, I think things are going wrong. And I'm not suggesting for a second that it's only because of his vested interest that he's optimistic, but you would expect him to be optimistic at almost any point in time, except from a trading perspective, maybe 3-4 months or 6 months, you take a dim view. But generally, you would have to be optimistic, right, with that bigger portfolio. But that's not the point. I think 2017, I think the next 1 year since we are discussing that, I think the most important question is, in my eyes, are twin. One, will we finally get the acceleration in the earnings recovery, which we have been talking about, and our voices have gone hoarse talking about it, but it's still not materialized. We are seeing a very, very protracted and slow and sluggish economic recovery in India, whichever data point you look at, earnings included. Now, will the next 12 months be finally the turning point of that earnings acceleration that we have all been hoping for and have not had yet? B, and very importantly, I think the next 12 months are very critical with two important global dynamics, which are short-term and medium-term. I think the short-term dynamic is that globally people will have to adjust with a higher cost of capital. And that's something which is a change after 3 or 4, or actually 4 or 5 years of a very, very low cost of capital globally. That is slowly beginning to change around, and that adjustment will need to be made. That's a very important short-term adjustment which markets have to make. And the medium-term adjustment is whether for some reason the US slips into a recession kind of mode. It's not a base case scenario for anybody, but I think there are some things which are floating in the wind which suggest that you could have something like that in 2017. Now that is an outlier, it's a risk, and if that happens, then one would have to moderate one's expectations from the equity market. But otherwise, the whole game of the next 12 months is between an earnings acceleration in India versus an adjustment to the global cost of capital going up. And I think the give and take between the two will determine what kind of returns shareholders make between this Diwali and next Diwali.
Okay, Udayan, thanks a lot for your time, and once again, have a happy Diwali and a good Samvat 2073. Thanks for joining us. So that's our own Udayan Mukherjee. Let's talk about the market opening. It's a normal procedure. You have a good opening. That's an auspicious, the auspicious trade that you take on Diwali day. A lot of people believe that on this day you buy just one share of your favorite stock, but you do that on the buy side, and that's where the start is always in the green, and that's what's happened. Let's talk about some of the stocks then. Lupin, Tech Mahindra, Bharti Airtel, Idea Cellular are some of the stocks which have opened on the way up, and Dr. Reddy's, Reliance and Tata Motors on the way down, Sonia.
Oh yes, even in the broader markets, you are seeing a lot of action, as you rightly pointed out. A lot of non-index large caps are seeing money being put in for that token trade. RBL Bank is up almost about 3%, a stock that has picked up lately. Syntex Industries, Manappuram Finance, Ashok Leyland, these are all non-index large caps, right? They have been making money for investors. IDFC Bank, Federal Bank. I see Atul nodding his head vigorously. Atul, I think you made a lot of money in cards, no? The last couple of days, so you're buying a lot of stocks.
You won't believe, I haven't played cards all of this season. I went for a movie yesterday. So it's been a shockingly no card year.
Okay, so you're still buying in this market?
Well, I think I really don't do it on a day-to-day basis, you know, but I still am invested.
More importantly, do you see India outperforming this year, Atul?
I think that's a very important point, Anuj. The big theme, I think, for the year, if you ask me one single thing, is the outperformance of the emerging markets vis-a-vis the developed markets. We've expressed a lot of concerns over the developed markets, but when I look at charts, if you look at the comparative performance of the EM versus developed markets, you will notice that the EMs have had a 5 to 6 year downtrend from 2010, 2011, and a big underperformance. It's almost a downward sloping, and this trend has broken out. I feel that this is going to lead to a big outperformance in the EM space. You're already seeing it in the last 3 to 6 months, the way Brazil, Argentina, Russia, of course, that's more commodity-driven, have outperformed.
Yes.
But when I look at the MSCI Emerging Market Index, I still think there's a 15 to 16% move we could see. India is a very important subset. A lot of flows depend on that. Assuming domestic investors continue with the SIP route, I think the big silver lining in all this global doom and whatever issues that we expressed is this whole thing of outperformance of the emerging market basket. I think that may be the biggest theme for the year on a macro space, and I am very optimistic about that.
Okay, on that optimistic note, Atul Suri, thank you as always for being with us, and you have a great Samvat 2073.
Same to all of you. Have a great, prosperous, successful year.
Thank you. Well, the market has opened. It opened in the green and it's trading absolutely flat now. The mid-cap index, though, is up almost about 0.5%. And if you're looking at individual stocks, then it is names like Lupin, Tech Mahindra, Idea Cellular and Bharti Airtel that are doing quite well this evening, up almost about 1 to 2%. ONGC, Aurobindo Pharma are also not doing too badly. So on that note, let's do one thing. Let's take a short break. But when we come back on the other side, we're going to be joined by another expert, Samir Arora of Helios Capital will be with us, and we'll have our usual technical market wallahs also joining us in moments from now. Stay tuned.